There's a lot of hesitation in the markets as everyone awaits NVIDIA earnings on Wednesday. We're going to be discussing those, how people are positioned, what we expect to see in some of the economic data, and much more today on Money Never Sleeps. Thanks for joining us, everybody. As we get going, remember to hit that like button and subscribe to the channel if you haven't yet. Nothing Kevin or I say is financial advice, so please do your own research before making any sort of financial decisions. Kev, kind of a boring start to the week for the most part. We're seeing some weakness in tech, some strength in the small and mid caps as markets continue to absorb what was said at Jackson Hole on Friday. We have NVIDIA earnings on Wednesday, economic data Thursday and Friday. It's going to be a fun week after we get through a few boring days. But how are you doing today, man? How are you feeling about the markets?
I'm doing okay. And, I sent out some cryptic tweets over the weekend of just like movie still images. And I kind of feel like there's a lot of things that are lining up for this being a fun fucking end of the week. I'm very excited to see how this market plays out, especially going into the holiday weekend, getting into a new month because we are getting the monthly close and then we're starting September as soon as we open up on Tuesday. But Asia opens up on Monday, if we're not mistaken. I still believe they don't take any holiday for Labor Day or anything like that. So we can expect some type of volatility post NVIDIA. I think that's going to be the main thing. Everyone's focused on that. That's why we're seeing the market sell off a little bit. We're seeing more positioning than I would say any type of actual action that's taking place. But there's a lot of things that are just in the perfect storm for something to absolutely go in one way or the other, right? You were talking about their point differential for their earnings being pretty wonky. Those big numbers. What was
Yeah,
it again?
I was listening to some stuff this morning on Bloomberg. Who when I'm up early, I like to listen to Jonathan Farrow and Lisa Abramowitz over there. But they were discussing moves in the ballpark of 9% in either direction based on how these earnings come out Wednesday afternoon, which would explain the positioning that people are taking right now. They're making a stand. They see an opportunity, like, hey, let's make a bet. Like, the volatility will be there. Let's make a bet in one direction or the other. I'm not doing that because I'll get out traded by these people. So know your role at some point. But yeah, I think we're going to see. You have Jim Cramer telling the people who listen to him that no matter what happens with earnings, if they come in under expectation, NVIDIA is still a good company. Don't panic. You have some who are expecting the AI boom to continue and chip sales to increase, and them to have another beat on revenue. The forward guidance is interesting. Also interesting, the $500 million worth of shares that Jensen Huang has sold since the last earnings report came out. So maybe he's expecting the earnings and forward guidance to not be received quite as well. I don't know. I'm going to watch it play out. It's going to have a huge impact on the NASDAQ, obviously. We're seeing some weakness there today. That's really only part of the market that is kind of struggling is some of the bigger tech names, with Tesla down over 3%, NVIDIA down 2%, Meta down about 1.25%, 1.33%. So it's a really important earnings call for the magnificent 7 or 8 or however many the hell it is. But we're seeing that strength in the smaller and mid caps with the expectation of interest rates coming lower.
Yeah, and I think it's kind of the thing where it's set up for the perfect storm. Everyone's seeing a lot of the small to mid caps doing fairly well, right? But they're also seeing the dollar drop pretty significantly in the past few days since the announcement. I mean, actually, the 2 days since the announcement, but also the week before that, the dollar just kept on tanking and tanking and tanking. And this is kind of the thing that's really scary here, right? The dollar getting weaker means other currencies get stronger. We know that the yen is one of the top currencies that are used in the world. Why the carry trade exists. So a weaker dollar for the short term is very bullish for the yen, which is bearish for all equities across the board. And we know that tech equities are where most of the in carry trade is, pretty much sitting in. NVIDIA makes a huge case for why we could see a bit of a market pullback if all of those kind of line up perfectly, right? And I think with some of the smaller caps, we do see those sell off too. We're seeing kind of just the rotation of capital pulling out of one thing into the next. It's very possible that's what's happening, but it could get a lot worse if things are just all the stars align and there's just a lot of chaos amid Japan, amid tech in the US, and then just the dollar continues to weaken, right? There's no guarantee the dollar gets stronger unless we get into a financial crisis. I will say that seems like that's been the case throughout history. If we get into a financial crisis, you might see the dollar spike higher, but for the time being, it's probably going to continue to bleed, maybe to that one low before. Let me see, I can pull it up on my screen. Trying not to break my computer or the internet today because for some reason it's a little shitty out here today. And yeah, so I mean, we could be finding a double bottom somewhere around 99.5, which would be the July 2023 low. I mean, if you lose that, then you're probably coming to somewhere around 96 points for the dollar. So that's gonna be a very interesting level. I'm just gonna put this down here. But then from here, you could see an absolute just like straight up missile, very similar to how we saw in March 2022 when they started raising rates. The only difference is instead of it raising rates, it's going to be a financial crisis. And then, a lot of people are going to sell off assets and go into the dollar. And that's kind of the artificial faux strength that you will see in the market. It kind of correlates with gold selling off. So don't think that this market isn't interconnected. It very much is so. And the stupidest thing could just set all these dominoes in the right direction and absolutely topple everything over in such a short period of time. So as small as an earnings call, it's only one company that we're getting this week. It's a very big earnings call for pretty much, I would say, the remainder of the entire year. I think it's probably the biggest earnings call that we will have for the rest of the year to see how things will play out for the rest of the equity market, whether that's up or down before or after even the election.
We haven't been paying as much attention to it, but there are other retailers that are reporting earnings, and it's in some of like the middle class kind of apparel companies. We have Lululemon, a little bit higher tier stuff being reported. We have, I believe, Foot Locker as well. So going to get a little bit more information on the health of the consumer. Are people still out there spending like we are being led to believe, or is the weight of these big credit card delinquencies and these high interest rates really starting to weigh on people finally?
Yeah, and that's, I think, a really good point to bring up too. We haven't talked about them necessarily, but a lot of these consumer staples, we've been told that the consumer is resilient nonstop, right? It's also by the same people who are telling us now that they're going to cut rates, but also that we're going to stay restrictive after we cut rates. Makes a lot of sense, Fed Speaker Daily. But you kind of have to question whether the consumer has money here. I think the pandemic savings, a lot of the money that was circulating, long gone. Agreed. Completely agree.
I
And
ran
a lot
out
of,
like earlier this year, I want to say.
but they
Like,
continued that narrative for a long time, did they not?
oh,
They were
they
saying that, and so that's why you kind of have to question, like, are they going to? I mean, even if they do report earnings and the stock doesn't necessarily move in one way or the other, does that show you a greater picture of how the U.S. consumer is really performing? I saw a stat recently. I think someone sent it to me. I can't remember who it was. If you're watching this and you sent it to me, thank you. But it was saying that Gen Z is offloading their pets because they just can't afford it, and their animals are actually putting them in debt. I also saw a statistic that said that 61% of Gen Z ages like 18 to like 27ish, 61% decrease from, I think, what was it, late 60s, buying cars for the first time. We're seeing a lot of people just unable to do certain things right now. And again, we continue to say that the economy is strong. We continue to say that there's no issues. The Fed thinks that we're still on track for a soft landing. We'll kind of see that in these earnings, the ones where people are spending money. Because if they're not spending money, well, then I don't necessarily know how anyone's going to be making money. Maybe a few months from now. It's going to be very interesting.
Yeah, it absolutely will. I want to look, some of the other companies who are releasing earnings this week. Obviously, NVIDIA is a big one.
Dollar General.
Salesforce is another one. We'll see what happens with CrowdStrike.
Oh my gosh.
They also have so CrowdStrike, Salesforce, and NVIDIA are all the same day. So Wednesday afternoon, we'll probably do our Wednesday show
Later.
a little bit later so that we can be around for of these earnings. It
Oh
should
my
be
goodness.
a pretty entertaining afternoon.
That's gonna be bad.
Entertaining if you're a big dork like me, but nonetheless an entertaining afternoon. So those are some of the bigger ones. Wednesday is going to be a fun day. Then, like I said, Thursday we get Q2 GDP second revision, and initial jobless claims. Friday we have PCE, income and spending numbers coming in as well, and then the following week we get the August jobs report on Friday. So a lot of data to be absorbed, and we're going to find out if it's going to be a 25 basis point cut or a 50 basis point cut based on how those, right now the market has it priced at a 25 basis point cut, about a 70% chance that that's going to be what happens. If the numbers continue to come in and they look strong, or if, the labor market continues to look weak, we'll probably see that move in the area of a 50 basis point cut. Then, it's a really interesting situation, Kev, because a lot of critiques that the Fed got was raising rates too slowly. They took their sweet ass time and they did this little 25 and then a 50. And then they had to be like, holy shit, we got to do 475 basis point hikes in a row. And so on the other hand, are people going to be saying, all right, we need to cut faster now to deal with that? Or are they more comfortable with the slow cuts? That's the difficult situation the Fed has put themselves in.
Yeah, and I think they always fuck up throughout history when it comes to this. And again, we've had maybe one soft landing, and I wouldn't even consider it a soft landing. But it seems like they continue to mess up, and especially when it comes to policy and how it is restrictive for long periods of time. And either they're always forced to cut, or they cut, too quick over a short period of time, and the market still has a little bit of juice left in it where QE kind of bleeds in, but then we start to see all the effects of some of those rate cuts, because we do know that a lot of that is it's a lag, right? We continue to see the lag, and I think there's arguments to be said that if after Wednesday all bad news is bad news in the markets, we understand that maybe the revision's bad, the jobs numbers bad, PCE is bad, all that stuff kind of starts to mount. There's an argument to be made that we get a 50 basis point cut. Now, would the markets react to that bullishly? Probably shouldn't. But again, the markets might do whatever. The thing is, the faster you cut, you won't necessarily see a lot of that hit the markets for a period of time. Even though you're cutting, you're not going to see. I mean, debt lending standards are going to be extremely tight for unknown period of time. I would say maybe could be 6 months, could be a year after they start cutting. I know in 2008 to 2009, it was a period of time before consumers were, for the most part, were able to borrow at lower rates, despite the bank just saying that your credit's not necessarily good enough, or if we do give you a loan, it's going to be a little bit harder for you to take money out or borrow from us. I think it's going to be the same way here. I think that the Fed needs to get to zero again, which is a terrible thing to say because that's not sustainable. But I think that's kind of the course of action that plays out if things do accelerate for bad news, getting worse and worse over the next few weeks.
All right. Do you want to take a look at some of the charts right now? I think we've gone over sort of the bigger macro picture for U.S. markets here this week.
Let's pull up the S&P real quick.
Perfect.
Yeah, just pulling this up.
And then we can hop over and look at some crypto as well.
Definitely. Yeah, this is the interesting thing about the S&P. A lot of people are talking about the double top. Is this still possible? Yeah, we can get to 5670, right? That could happen tomorrow. Markets could just get absolutely juiced before NVDA earnings. And then going into Wednesday, we hit that. But the key thing here was this little gap that it's kind of hard to see me pull up one of these rectangles. It was right here, and we filled it the other day. Us filling that gap pretty much means that we have plenty of room to the downside now. The markets were just chasing that liquidity. Could they push up a little bit higher? Yes. Do I think they will? I don't necessarily know. I think Wednesday kind of gives us the idea whether this is a double top or if we're putting in a new high fairly soon. It seems like the volumes have been dropping while the stochastic is getting higher and higher. I do think that if we do start to see a big move in the market, it stems from NVIDIA and the yen carry trade. So I think that we have to be looking at certain levels. Obviously, this gap down here for the S&P at around 54.99 to about 54.67. It's about a 30-point gap here. What is that roughly from where we currently are? 2 to almost 3% drop in the markets. It's not necessarily a big move, especially if that happens over a period of a few days. That's one gap. But to remind you how important gaps are, we have quite a few to the downside in this range here between 5,000 and 48.3. And if we go further, actually, I might have deleted all the gaps that we have, but we got a ton of gaps all the way down to like 2,200. So it really depends if the market has the strength to fill some of those. It definitely had the strength to fill the ones to the upside because they were so close and nearby. But there are a lot of bearish patterns on the macro that continue to tell us that maybe we do have to see a bit of a correction. But the question is, when does the market turn? Maybe it's Wednesday if we don't get another leg up higher. Obviously, if NVIDIA earnings come back spectacular, market reacts to it really well, then we would have to readjust and see where this market could finally kind of top out. Right now, seems like the double top is a scenario. Do I believe it? I don't know. I don't necessarily believe anything right now. I think it's just a matter of time before something gives out. Liquidity is what I'm talking about. But I think that for right now, we've done nothing but fill this gap. There's no reason to believe that this is going to go up or down before Wednesday, in my opinion. And same thing with the NASDAQ, right? The NASDAQ, sure, it could go up a little bit higher to 20,220. Kind of has this little pullback here that maybe lends itself to. But for the most part, this is still kind of just a lower high. And we could be getting our decision on where the market decides to go for, up here, north or south, come Wednesday, right? Again, two indexes that are heavily correlated with NVIDIA, which are also heavily correlated with the yen carry trade. It's gonna be very interesting Wednesday. I would say, Wednesday night's gonna be really interesting because we have earnings and then we have Japan's open, and that's going to be exciting to see how their equity market reacts to the NVIDIA earnings itself, right? You can see some of those unwinds, maybe sell off. Maybe you get the yen a little bit stronger. If that's the case, then you're probably going to expect some sell-off pressure in the tech stocks come Thursday or Friday. So just keep an eye on that. Outside of this, is there any other TradFi things we should probably take a look at?
So while we're on the topic of the yen and Japan's market, with the dollar getting absolutely beaten to shit the last weeks since, basically since that day where all the fear around the carry trade, is that going to lead us in the direction of when they do eventually hike rates in Japan, decreasing the impact that carry trade is going to have?
Yes and no, but I think they're going to act after the event of what comes with the carry trade, right? Right now, we're seeing a lot of defense of the carry trade from absolutely unwinding. We see that Japan and, oddly enough, pension funds are supporting the Nikkei at a certain level. They don't want it to go below 3,800. There's a lot of, let's not forget how much money there is in the equity markets when it comes to a lot of these pensions. And this is for the entirety of Japan. You're going to see a lot of people trying to defend these certain levels. They definitely do interventions to defend some of those levels. If the dollar, say we continue to cut rates, so obviously the dollar should go down, but they're also raising rates, so the yen should go up. That's just the unwind of the carry trade in itself. So I would assume if you don't get the break by then, the yen carry trade just gets obliterated if people aren't out of the market because of rates being hiked. Now, the thing is, they won't hike rates unless something necessarily breaks. I think they're afraid that if they do it, they're going to force the carry trade itself. It's almost like Jerome Powell coming out tomorrow and saying that the economy looks like it's slowing down. He won't say that because then it's his fault. Same thing with Japan raising rates. Then it's their fault that everything kind of fell to shit. But it's not necessarily seen as that, okay, people are over leveraged. They continue to add more leverage. And this is the funny thing. Let's just talk about the carry trade here for one more second, because it's all I care about, it seems, these days. With the carry trade, after it blew up on August 5th, what did they do to protect their positions? They loaded up on more bets, leverage bets, borrowing the yen because the yen started to get weak once against the dollar after that 141 mark, right? And because of that, the trades got even fucking bigger. So if that thing unwinds, you can imagine just margin call after margin call across the entire sector, and then think about how many people will have exposure to them via derivatives, or how many people are going to lose money because some of these banks might go bust. And then you have to wonder about, if there's going to be any types of bailouts, or if there's going to be any type of economic relief packages that could be used to aid a lot of these institutions. So they won't necessarily raise rates. I think they announced that they would. I think they're afraid to do another rate hike. But I think with everything kind of playing out, the dollar's getting weaker, yen's getting stronger. They are fucking praying that this NVIDIA earnings call is just bullish, because if it's not, then everything from ARM to Apple, Tesla, anything that they have tied up in that trade is just going to go to shit, and you're going to see a lot of people just mount major losses. And again, we're talking about something at the top of a market. It's not the bottom of a market where, you know, the losses are kind of insignificant. We're talking about like there is so much room for downside. And if everyone starts selling, everyone else is going to start selling, and then you got to sell before the next guy, and it's going to be absolutely disgusting to see, you know, your portfolio if you refuse to acknowledge that the yen carry trade wouldn't have that much of an impact, or you believe the 25% is all that's left of the carry trade from JP Morgan. That being said, long story short, they're waiting for something to break before they make a move. They don't want it to be them. That's the reason that it failed. They're kind of hoping that something happens that takes the pressure off of them.
All right. Now, the other question I have, and this is more around the Bank of England. Do you think that the Oasis concerts next year are going to help buoy England's GDP similar to the Taylor Swift concerts last summer in the U.S.?
Is it a full reunion with both Gallagher brothers?
Oh, yeah. Oh, they're back.
Oh, my gosh.
That was me. That's not a serious question, in case you were wondering.
Yeah, but let's take it serious. Back in the 90s, probably and even 2000s, you know, early 2000s, probably the Taylor Swift of the era,
I mean,
especially over in England.
My age demographic is going to eat that show up. Okay, like let's just be honest. The millennials and the elder millennials, such as myself. I mean, I might have to go over to England just to see them perform one of these times.
I'm sure they'll have a U.S. arm. It'll be like in 3 cities or something like that. It'll be like New York,
I think
Los
they're
Angeles.
doing a few shows in England next year. So,
oh wow, that's let's see if people are still have money and jobs at that point. But I'm sure they'll find some money to go see the Gallagher brothers.
All right, we just went off the rails. Let's look at crypto real quick before we call it today.
Yeah, so Bitcoin 64K, right?
Just under now. It went up to 65 for a hot second Sunday, and it's back down to under 64. We're seeing it very overbought on the daily. So it's been like this slow ascension to being overbought after that big move on Friday.
Yeah, I think you got to. I'm not even sharing my fucking screen, so no one knows what I'm talking about right now. 60. Yeah, so this is what I was looking at. 5 waves down here. I'm looking at a 3-wave move up. ABC. This could be complete. I think it is complete, to be honest with you. We're just waiting to see kind of what decides this market. I think Wednesday is going to decide a lot of it. And again, it comes to liquidity. Doesn't necessarily come down to fundamentals at this point. Like, you know, I don't know, a 3x long leverage Bitcoin ETF approval or some stupid shit like that. It really comes down to who has money, who needs it, and how can we get out before someone takes more money away from us. And I think that's kind of what we have to look at across the board for crypto in itself. But yeah, you know, if this is the top of this ABC corrective move here, then we're probably looking at 5 waves down. You're looking at support right here at 52,847. If not, you know, honestly, 46 to 45K. That's a very reasonable, I think, 5-wave move down, especially if it's pretty strong, that move. I think we're going to lose support here. I mean, we got some support here at 52K. I think we could lose that. We could end up somewhere in like this 45K range. Now, is that the end of the move? No, obviously it's going to trade more and more. I just think that we're starting to see more and more exhaustion the longer we play in this structure. So unless you're finding money that's pulling in, and, you know, we were overbought in the daily, we weren't able to push to a new high with the stochastic RSI in this little trading pattern that we're in, kind of tells me that there's weakness in Bitcoin. We have to see it pull back a little bit before we get any type of bounce. But I would say 45 to 46K maybe is a target that we could be looking at. 5290 right here, or 52900 right here is obviously a level of support that would be tested. So you could possibly see something like, you know, this is something like that. Maybe not that, maybe a little bit less than that. And then probably like this, something like that makes a lot more sense, where you get wave 1 goes down to maybe the 56 bounce before anything bad happens. And then you break through this without even necessarily holding it. And that gets us to the bottom of this channel, maybe another bounce, and then somewhere closer to that 45, 46K level. seems like if you would get 5 waves. That's just one thought experiment for it. Do I think this has any chance of going up? I really don't. It's just my opinion, but it seems like we're very exhausted. It seems we can't put in a higher high each time we keep doing this. And I mean, even if we are trading in these ranges where we fail to put in a higher high, sure, you can make money on the swings, but this is definitely telling you that there is a weakness across the board. And since we're not holding the same low each time, we keep going lower and lower. It's another sign of bearish continuation that we will be breaking probably the previous low, which is around 48K. So keep an eye on that. But outside of that, when we look at maybe even ETH for a second, ETH's really been doing nothing, and look how much the stochastic RSI has been. It's jumped on the daily. Like, sure, you went down to 2120. What is that? 2127, and that's August 5th. Yeah, that's during the carry trade. But if you take that away and just look at what we're dealing with here, I mean, this is pretty much kind of like a parallel channel. Not a perfect one, but it's been trading within it, and it's failing to get higher than this level of support that's here, or resistance at 28.28. So what this tells me is we're probably going to be breaking down from this. Could we go back to 2120 or so? Yeah, it's possible. You could hold support on that a little bit more. But I mean, if you look at the strength of this against Bitcoin, Bitcoin's trading in a completely different pattern. ETH is following its own path at this point. And, just looking at some of the alts too, alts look more like ETH at this point, right? Kind of showing small movements to the upside, nothing grand or, nearly as strong as what Bitcoin is doing with a lot of its price movement. All these alt charts pretty much look the same for the most part. Obviously, this one's a little bit different after the settlement, but Matic, AVAX, Link, Total 2 looks the same. All right, that's Total 1. Total 2 looks the same.
I mean,
Total 3. It's all the same shit.
I was just measuring it on my end. ETH has given up a ton of gains. Like, Bitcoin is still up 50% on the year. ETH is up 18%, which is like, don't get me wrong, it's a great return, 18% in a year. If that holds for this year, we'll see. But yeah, alts are just getting, by comparison, and that's why, I feel okay continuing to hold and even accumulate ETH, because like the narrative on it has turned so negative, and like I get it, it's underperforming, but that still leaves room to the upside. Cool stuff is still being built with ETH, like new L2s that are actually, have some practical use case to it are being built on ETH. So I think the narrative and the hate on it has gone too far. At least that's like what I feel from the sentiment via like, crypto Twitter, which I'm always willing to bet the opposite of what a lot of people on there are saying. So I still think ETH is a good hold, and I'm holding my position for the long term there.
Let me ask you a question. Do you think that ETH will put in a new high before it puts in a new low? I'm talking about like an all-time high. Do you think it'll break the all-time high right now?
When you say low, give me like a ballpark of what you're thinking there. Like low within the last year?
I would say, do you think we put in an all-time high, so 48, north of 4,800, before we put in a low somewhere where I would say beneath 2,000?
I mean, we're a lot closer to below 2,000 than we are to 4,800 right now, right? Like, we're only $700 away from that number. So I would say it's probably more likely we go below 2K before we hit a new all-time. I think if we hit a new all-time high, it won't be till around like maybe this time next year.
Okay, I agree. I completely agree. But the reason I wanted to ask is because this is the pattern that you and I, when we first started the show, kind of talked about, right? We said that Bitcoin was going to go 5 waves down. Obviously, Bitcoin in an extremely manipulated market, which I don't have any problem saying, because we've seen fucking CZ go to jail for some of this. We still have some other guys out there that are, playing with Tether that can impact the price and support on exchanges. But we said that there were certain charts, and we did not want to see this B wave for Ethereum go higher than the origin, which was 4,800, right? We didn't want to make this a little bit bigger. We didn't want to see this B wave go higher than this origin up here. And as of right now, it doesn't look like it's going to, in my opinion. But again, I'm bearish all the time. What I honestly anticipate is that we continue out this structure into next year, and then there's a good chance that we could buy ETH, obviously a lot lower. But the way the ABC structures work, if the B wave doesn't go higher than the origin wave, then this is a regular correction. And that tells us that the C wave is going to go lower than the A wave. So what we got for A wave was around, let me see. It was the low 8,800, or no, 880. 880 was the low for that one. So what I would anticipate is that we put in a new low for Ethereum in this structure that puts us somewhere, obviously I said like 637 was the one. I think I still have it on here. It's actually 637 is the level where we find support on Ethereum. Now, does that have to necessarily hit there? No, it could go a little bit higher, but I would expect it to go lower than $880 per coin. Now, what does that mean? I think that means that there's a great chance for getting a lot of return out of Ethereum once it gets to those kind of levels. So I know a lot of people are thinking that, we're going into a bull market. Obviously, rates are being cut. The chart itself and how the rest of the alt market is continuing to play out and Bitcoin's dominance still being extremely strong tells me that there is still a very good chance that alts see new lows. And in this cycle, in this corrective pattern, ETH could definitely go below that 880 level before we start to see some momentous growth to the upside, where people can start talking about $10,000 a coin again because maybe inflation's really bad in 3 years. Who knows? But that's just something that I'm keeping an eye on. I'm glad it's played out this way because it's probably the most technically sound structure we've seen out of all of crypto, despite all the things that have happened with Tether, with manipulation with the ETFs and everything like that. ETH has actually performed the most reasonably sound outside of all of that shit.
All right. I think that is how we are going to wrap it up for today. Appreciate anyone who watched today's show. We'll be back on Wednesday, a little bit later than normal for the live show, if that's your cup of tea. Otherwise, you can play it back when you feel so inclined. But we'll be back Wednesday afternoon talking NVIDIA. Maybe look at CrowdStrike a little bit, Salesforce, see how the markets are responding. Should be a good amount of volatility. So strap in, grab your popcorn. We'll have some fun there. Have a great rest of your day, everybody. Stay safe in the markets, and we'll see you Wednesday afternoon.
Take care, everyone.